let me tell you two of the most popular all-world ETF on Singapore personal finance community, VT and VWRA. But is that it? So simple? No other alternatives? After my best S&P 500 ETF video, this is the sequel. Not to tell you what to buy, because this is not financial advice, but I will just share the facts and you can make your own decision on what is the best ETF to buy. And if you're new here, my name is Chris, an ex-chartered accountant, now a personal finance YouTuber, and I run a Telegram group of close to 23,000 members who are interested in building their wealth for early retirement. So join us in the free Telegram group right here. Now, many of you are already familiar with the S&P 500, which is purely US market. How about those of you who want to diversify across the world, like US, Europe, Japan, China, India, Southeast Asia in one ticker? Now, there are two main indices for All-World Index. Number one is the FTSE All-World and also the MSCI All-Country World Index. In terms of the differences, for long-term performance, the difference between these two indices are negligible. But what actually matters are the fees, the taxes, the structure, and the domicile. Okay, I'll start off with the most popular example, which is VT, Vanguard Total World Stock ETF. And I'm very sure we have heard of it before because it's covered in most of the US-based YouTube videos. And it tracks the performance of the FTSE Global All Cap Index, which covers both well-established and still developing markets, and that includes small cap. But here are the facts. It is US domicile, it has around 10,000 holdings, total expense ratio of around 0.06%, and it's genuinely the cheapest stated fee in this group. But cheapest does not always mean it's the best. We'll talk more about this later, because you realize that Singapore has no US tax treaty, and that means you have 30% dividend withholding tax on all distributions. Moreover, there is also estate tax that kicks in above 60,000 US dollars for US assets. So if you have a very small portfolio just starting out, the absolute dollar tax drag is quite small. So it is pragmatically still manageable lah. But once your portfolio start to compound past 60,000 US dollars, you will start to face the estate tax exposure. And it becomes a structural risk because VT was not designed for non-US investors in mind. Okay, we need to look at UCITS ETFs that were designed to solve exactly this problem. But I'm very sure that some of you will still choose VT. Why? Because it is the easiest to buy. Okay, most trading platforms, they offer it. Okay, like your standard discount brokers, Longbridge, Momo, Tiger, Weibo, Usmart, all these offer VT. And if you couple them with some sign-up promotion, it makes it very easy to fulfill the buy trade requirements. For example, if you just look at Longbridge, you deposit 2,000 Singapore dollars and 3 buy trades, you can get 80 Singapore dollars of NVIDIA shares and the sort of interest boost coupon. So this is just to incentivize you to sign up lah. If you haven't done so, you can get some of these welcome rewards. It is not sponsored in any way, okay? But I want to talk about the domicile problem. Okay, why is this a big problem? Is because the dividend withholding tax and the estate tax, these two issues will eat up your returns. Number one, let's talk about the 30% dividend withholding tax at the fund level. Now, if you look at the VT, the yield is roughly around 1.8% today. And you look at it, 30% of that disappears before it reaches you every year. Okay, it's gone to the tax department of US. So that's a tax drag of around 0.54% per year. Okay, loss, okay, it's not gone to you. Secondly, we look at the more important thing, which is US estate tax, because if you die holding 60,000 US dollars in US domicile assets, your family gets hit with up to 40% estate tax on the excess. So 60,000 US dollars threshold is actually not a lot. You can build that in a few years. Okay, so this is always a problem for those ETFs that are domiciled in the US. That's why for Singaporeans, the solution is always to go for Ireland domicile UCITS ETF with lower withholding tax at 15% and no US estate tax. Therefore, if you look back again, VT is not as cheap as it looks, not for Singaporeans, okay? But it is easy to access on most trading platforms with US market access. Okay, but if you want to look at UCITS ETFs, you will need a broker like Interactive Brokers. Why? Because it provides access to London Stock Exchange, which also happens to have favorable foreign currency exchange rates. So you can click on my Interactive Brokers link or scan this QR code here to find out more. Okay, so with that, we move on to our first UCITS ETF for discussion, and that is VWRA, Vanguard FTSE All-World UCITS ETF bracket accumulating. Okay, and we're just going to cover the facts because I'm not recommending you to buy. I'm just going to list down what is based on the fact sheet. Firstly, it is LSE listed in the London Stock Exchange. It is Ireland domicile and it tracks the index called FTSE All World Index. You have around 3,800 holdings in large and mid-cap companies in developed and emerging countries. Okay, so it's quite diversified. Expense ratio recently reduced to 0.19% per annum, and it is an accumulating fund, which means the dividends are reinvested automatically. There will be no cash payouts to you because the dividends are reinvested, so it's not paid to your account. Right now, the ETF price is around 170 to 180 US dollars as we are filming this session. And VWRA is the gold standard of an all-world ETF because it has relatively cheap expense ratio, it is well diversified, and it has performed well for the past few years. But we must always remember, past performance is not a guarantee of future results. So that's VWRA for you. Also, Singapore FI's Reddit's favorite ETF fund, VWRA. We look at another competitor, which is FWRA. So this fund is issued by Invesco. It's called the Invesco FTSE All-World UCITS ETF bracket accumulating. Now, the interesting thing is that it actually tracks the same index as VWRA, same domicile in Ireland, okay, same accumulating structure, but the difference is the expense ratio, only 0.15%, which is 4 basis points cheaper than VWRA. Now, 4 basis points seems quite small, but if you compound that over 20 to 30 years on a large portfolio, that's where you can get real savings. And as of the date of filming, the price is around 8 to 9 US dollars. Okay, and I know what some of you are concerned about, which is legitimate. Firstly, it is a newer ETF. There's lower trading volume, there's wider bid-ask spread than VWRA. Because the ETF price is so low, right, compared to VWRA $100+, this is just $8 to $9. So you may get poorer spread compared to VWRA, and that is a valid concern. But if you're just doing like a one-time lump sum buy, then you can save a bit on the fees. That is the fact. Now let's take a look at the next ETF, which is ISAC. And this is the iShares MSCI All Country World Index UCITS ETF bracket accumulating. So this is the BlackRock version, which tracks the MSCI All Country World Index. Now, like I mentioned previously, MSCI All Country World Index versus FTSE All World Index is quite similar. There's minimal difference on. But you look at the expense ratio, it's 0.20%. Is Ireland domicile, is accumulating. Price is around $110 range as of the date of filming. But you think about it, ISAC versus VWRA, which one is better? Okay, and the fact is VWRA is 1 basis points cheaper and it tracks a different index. So actually I would say it's not much of a difference. It's very similar already. But what is the difference of ISAC is that you can use SRS to buy, because most of these world ETFs you can only use cash. But you can go through StashAway ETF Explorer, which I covered in my SRS video. That's when their world equity portfolio or global equity portfolio, they use ISAC. And you can use SRS funds to purchase into the ISAC ETF. So that's just something special. But you have to go through StashAway and not just any other platform for SRS investment. So if you want to take a look at it, I already had done up a previous video on that. Okay, next up, let's talk about ACWD, which is relatively new. This is the SPDR MSCI All Country World UCITS ETF bracket accumulating. Okay, so it tracks the equity market performance of developed and emerging markets of MSCI All Country World Index. And recently, ACWD's expense ratio has been cut to 0.12%. Previously, it is not so low, I think 0.4%. But you see, it's tracking the same MSCI All Country World Index family as ISAC, which is Ireland domicile and accumulating also. So it is a good replacement instead of ISAC. As of the day of filming, the price is around 300 US dollars. And at 0.12%, you see, it's significantly cheaper than ISAC, 0.2%, and also cheaper than VWRA, 0.19%. So objectively, just based on the numbers alone, ACWD at 0.12% is actually a better option than ISAC or VWRA. Lastly, I want to cover a relatively unknown ETF, and that's called IMID. So this is the SPDR MSCI All Country World Investable Market UCITS ETF bracket accumulating. Okay, so this is something quite different, okay, because there's something called IMI, which is a totally different index known as the MSCI All Country World Index, IMI, which stands for Investable Market Index. That 3 letters makes a big difference because MSCI All Country World Index, IMI, covers large, mid-cap, and small cap stocks. So that means 9,000 securities across 45 countries, and every other ETF on this list only covers large and mid-cap. They do not include small caps. So IMID is the only Ireland domicile accumulating all-world UCITS ETF that includes the small caps. So that puts it closest to VT in terms of the breadth. But in the UCITS wrapper with the Ireland tax advantage, total expense ratio around 0.17%, ETF price is around $12. So you ask yourself, do you actually want small cap in your all-world portfolio? Do you want the exposure to small caps? Because that means more diversification and historically offered a return premium. But it also comes with a downside, which is more volatility. So if yes, then IMID is the most compelling UCITS options on this list because it is broader than anything else here. And if this is the first time you heard about IMID, please help me click a like. Okay, so here is a summary table that I just put here. Okay, I listed all this on my coffee shop. So you can also download it for free and you can compare. This is just a cheat sheet that I've coded, and yeah, you can just download for free because I cannot tell you what to buy. So I'll present all these facts right here so you can make your own decision. And I want to be clear, this episode is not sponsored at all. But if you appreciate my effort, you can help me click my IMID link. It will pay a very small commission, or you can just scan this QR code here. Okay, help to support the channel in making better content. So if you look at my series, I completed the best ETFs for S&P 500. I also completed the best ETFs for All-World Index. So is it time for NASDAQ? Okay, so if you are interested to talk about NASDAQ ETFs, go and comment NASDAQ +1. Okay, and if you still don't know, you are a beginner, how to invest, then you better look at this video on how to invest for beginners in Singapore.